Good morning and welcome everybody to Schwab Coaching for our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from Denver, Colorado, and today pleased to be joined by fellow Schwab coach, Mr. Brent Moores. Good morning, Brent. Happy to have you here this morning. How you doing?
Doing great, Kevin. Glad to be on with you. Good to want to talk about the markets today and see what's been going on and what's going to be going on, and good to be with you on that.
I'll tell you what, it's been a lot of the same outside of the throwback move we got late last week. Yeah. Pretty interesting price discovery over the last 2 to 3 days, validating short-term support, we think. But I think a good reminder today, Brent, might be that regardless of what the charts tell us, an afternoon like we have on deck today with a big company reporting earnings is entirely possible to shift the entire narrative, isn't it?
Yeah, so NVIDIA is going to report around, I think, 3:30. No, sorry. I got to adjust my time zones here. That'd be 4:30 Eastern time, I believe. And yeah, that's a big. I mean, that's not the largest market cap out there, is it, Kevin? Right now, I can't remember, but it's one or two.
I think we might have seen Tesla overtake recently, but I could be wrong about that. Those tend to come to me as headlines periodically here and there. Yeah. So, but nonetheless, big day on deck in the afternoon with NVIDIA. And let's at least set the levels that we'll be monitoring from a broad market perspective and get a little clarity on maybe what we need to be paying attention to relative to the indices that can kind of shed some light on a potential next trend for us. We'll see how that looks. So with that, let's just cover a couple of details. Everybody say hi to James Boyd in the chat. Make sure, if you're not already doing so, follow the three of us on X. We post there throughout the week with some charts or data points of note. Follow James at James Boyd CS, Brent, of course, at Brent Moores CS, and I am at Kevin Horner CS. And without further ado, let's jump into our disclosure detail. We'll remind you that our discussion is, of course, only informational and educational. Simply put, we do not make recommendations, so expressions of opinion are always subject to change without notice. We discuss technical analysis. We discuss concepts and strategies that traders may choose to employ, but the big takeaway with technical analysis is, like any other piece of data, everybody, we encourage you to make decisions based on multiple pieces of data, not one single viewpoint or approach. That'll help to eliminate some of the bias, we hope. With that, Brent, I thought we should look quickly at our heads up of an agenda, what we try to do here. Of course, we lean into the top-down methodology, meaning simply we look at things broadly, major indices, and then into sectors, and then into stocks in the news that are maybe moving within those sectors. Now, yesterday I did spend time looking at all 11 of the U.S. domestic sectors in the marketplace. So if you're looking for a little bit of chart detail that we don't get to today, just recognize that you have the availability in the playlist on the YouTube coaching channel to go back to yesterday's class. And in fact, you can go back a full year now. We've got an archive there of a full year for you to go back and see if any of what we talk about historically is valid. I actually encourage that because the reminder I want to give, we often talk about it here, everybody. We talk probabilities, never certainties as it relates to the market. And so my hope is that if you were to go back and look at some of those older archived videos, you'd probably see a lot of the same stuff that we talk about today, Brent. But my hope would be that it would be, if nothing else, leaning into process and encouraging you to do something similar there. So, Brent, as we look at what the S&P did over the last 4 sessions, I'm going to zoom in just to highlight this. Yesterday, we finished pretty darn close to the gap level, right? We got through it on an intraday basis. You can see a tiny little tail up there, but you can also see us trying to decide, do we bother pushing into the gap before we hear from NVIDIA or not? Right now, it's unclear.
It is unclear. We'll have to see. We do have, and we don't know, we don't know what NVIDIA earnings are going to be, so we don't know what's going to happen with that. But what we do have is we have a support level. We just bounced off that. It's right around that 20-day moving average right now. Came down to that, and that, by the way, coincides roughly with our highs back in mid-October there as well. And so there's your support level. We bounced off that, but look, support levels sometimes get broken, and so we'll have to see on that. We do have the gap, so the gap can act as resistance, and so I think in terms of events this week in the market, we got today, tomorrow, and Friday, and then we have holiday week next week, so kind of a shortened week next week. This may be the biggest event out there between the 2 weeks. I'm trying to remember what happens next week, if there's any, but certainly this week, I think NVIDIA earnings is probably the biggest potential to move the market here.
Yeah, I think you're right about that. The expectation of opportunity very likely tied to NVIDIA, and not much else necessarily. There's definitely more earnings details, but you're right. Between now and the end of the year, we do have the next FOMC meeting in December. But outside of this window here, I think the lean that people are wondering about is it a opportunity for a Christmas Santa Claus rally as we head towards the year end? Typically, as a reminder, the so-called Santa Claus rally does not really get going in November, not even in early December. It's really the week in advance of Christmas that is thought of as that window for the so-called Santa Claus rally. But we often see fourth quarter positivity as it relates to the broad market. Certainly doesn't mean it has to play out that way. This year, we've had a great year in both return detail and trends. Here we are residing pretty darn close to the highs, Brent.
We have. So it kind of begs the question, Kevin, I guess, when we've had such a good year, valuations, and I posted on X lately about market valuations by most historical measures. The PE ratio on the S&P 500 is well above average. It's, I think, like 20% above its 10-year average right now, something in the order of that. And so, yeah, there's not really a lot of negative news coming out right now economically. And so maybe not, that may not be a headwind against us. However, at a certain point, people go, maybe this market has been bought up so much already this year. I mean, percentage-wise, we've had a great year in the market. So I don't know, but that comes into contrast with the whole Santa Claus rally, that in the market year strength that we traditionally have. So something's got to give there on that.
Yeah, but Brent, I got to say, at least according to some of the data I've seen on X as well, I was following a CMT individual on X, and he points out that the forward earnings expectations in the S&P 500 continue to tick higher. So it's one thing to move higher against earnings expectations. It's another to move higher in the same direction as earnings expectations, meaning simply you could almost validate the trend we've seen here continuing the way that it has, simply because expectations for the 501 companies in the S&P are continuing to climb.
So let me just restate that for everybody here. When you have a high PE ratio, this is true on either a stock or a market level, there's basically two reasons it's going to come down. One, either the P part of it drops, that's the price dropping, and that was kind of a concern that I mentioned, or the PE ratio can go down if the E part of it, that's the denominator, goes up. If earnings increase enough, then that can also bring that down and help out the case there, and can perhaps a higher PE ratio when you have that. So we don't know what's going to happen here, but certainly you can justify higher PE ratios on the market, just like you can individual stocks. You can justify higher PE ratios on those when you have a higher projected earnings growth. Look, when you look at these tech companies that are high growth companies, they're going to have higher PE ratios than a maybe a blue chip or value company that doesn't have high growth projections there.
Right.
So that can be applied to the market as well as the individual stock level.
Absolutely true. Okay. So Brent, let's take a peek at, you know what? Before we move to the NASDAQ, one thing that I was doing yesterday, we were looking at the pivot points and seeing how we looked on a 5-minute bar and see if we could learn anything. I do think it's kind of notable when you take this back to the 5 minutes, you see where we failed, right? We made that high that was somewhat higher than the highest high we had on Friday, and yet what we've done today is simply roll over. Look, we opened above the pivot, started good, and now we're below it in the first 10 minutes of session. Not a great beginning, not what we were looking for initially. So let's see if that kind of holds true as it relates to the NASDAQ. NASDAQ 100, we're off about 0.5% here. Still hanging out right at the 20-day moving average, but we have been trying to discern whether or not that's a good level for us now for the last 4 days as well. Again, the highs of this week, the last 4 sessions here, having not been breached. So we've not been able to get back into the gap that we created with last Friday's action.
Yeah, so boy, we'll see right now. The probably the more reliable support level isn't that moving average, it seems like, but maybe the low that we had a few days ago there, and of course we have the 50-day moving average down there. But starting off the day a little bit of a rougher start of the day. Not terrible, but not showing strength.
Not showing strength, exactly. Not quite what we want to see, but it's clear we're trying to figure things out here because we've basically, with Friday's action, having not traded through the high, having not traded through the low, we've just been in between all of that action. So on the 5 minutes, you can see the similar play out there. Not a great start trading so quickly below the pivot, but hopefully we'll find a level of support here, potentially at that 20,500 level on NASDAQ. That would be S1 in the pivot point ledge. Talked a little bit more about pivot points yesterday. Again, yesterday's class being a solo, had a little bit more time for y'all. So if you go back into the archive, you might get a little clarity there as it relates to the pivots, everybody. All right. So again, more of the same. Yes, we have these indices moving in concert with one another. That can give traders a little bit more confidence. Let's see how that Russell here. Now, the Russell, we've gotten thrown back to major areas of support. So I drew a lot of lines in here yesterday. Let me go ahead and eliminate my Fibonacci level, which happened to validate this zone of support, Brent, as the 38% retracement of really the move that's been made since early August. That really weak Monday, August 5th open. And we've seen some continuation basically since. Breakout, throwback. Very common technical analysis pattern playing out as we speak, Brent. Are traders encouraged by yesterday's candle sufficiently, or is it a little early to know?
Well, it is probably a little early to know. And of course, there's other factors that play into this. I mean, not to beat a dead horse, but NVIDIA comes out with terrible earnings, say, after the whole market goes down. It's likely the Russell will follow suit tomorrow there, too. So we'll have to see. But and the market's down just like roughly about the same as the large cap market right now. So so I don't know. That is that's a pretty. You're looking at yesterday's candle yesterday. I mean, I have to say that's a relatively bullish looking candle. You'd call it a bullish engulfing candle. It's a nice. We're closed near the high of the day.
Yep.
And so, if we're going to bounce, it's gotten the technical help it can get, I think, from that bullish candle that we had yesterday. And that was kind of right off where you'd probably consider a support level, both the moving average, and you drew that kind of the zone there of a support as well. And so, sometimes a support bounce, even a bounce even at support, doesn't come to fruition. So we'll see what happens. But
yeah, that said, it does give the appearance of a proper location for the bounce, right?
It does.
The throwback location right to the prior highs. As you said, a bull engulfing candle at support tends to carry a little bit more weight from the bullish viewpoint than it does negatively, right? I mean, if that's a bull engulfing candle in the middle of a trend, for example, it's not going to be as insightful as it would be at a spot of support. And then, like you called out, we closed at the high of the day. So are we breathing a little here today? Sure. But let's see how that looks on the 5-minute bars yet again, because I have a feeling if we looked at this, chance is on the 5-minute, I'd venture to guess that we've are holding the pivot here, but let's see if I'm right about that. So here we are on the Russell, opened above the pivot. Our low today is actually above the pivot. And so if nothing else, Brent, I think short-term Russell investors here might keep an eye on that 2310 area from a standpoint for the day, perhaps.
Yeah, I mean, from an intraday standpoint, and this can certainly change in a very short amount of time because remember each of these candles are 5-minute candles here, but we're still holding your pivot point, and even if we drop a little bit, then we have our S1 level. But right now, that's intraday. It's holding up. We'll have to see, and yeah, I mean, I guess small caps, there's just a lot of different factors. Small caps tend to be more volatile than large caps in some areas, but today they're holding up relatively well, I guess.
Yeah, well, they're certain our relative outperformer versus everything minus the industrials. So the Dow Industrial Average. We'll see how that plays out. There's been some questions, Brent, that I thought we could address real quickly.
Yeah.
I know we were talking about earnings on the S&P 500, and Carol was just inquiring about the difference between earnings and revenue, which, correct me if I'm wrong, I mean, this just comes down to the difference between the money that a business generates overall, revenue, versus the net earnings, which are going to be inclusive of any charges and other expenses.
Absolutely. Sometimes we call them top line and bottom line. Top line is the at the top. If you think of an income statement, the money you bring in, so you may call it revenue, you may call it sales, is at the top of it. And then you have all your different expenses, your cost of goods sold and your general administrative expenses and whatnot and taxes. Then at the very bottom, you either make a profit or make a loss after you factor in those expenses. That's the earnings. That's the bottom line.
Excellent. All right. So hopefully that helps out, not just Carol, but everybody else as well. And then I saw a post in here just commenting about yesterday that the move we got could be considered a fake out. And, if we go back just to the S&P 500 briefly, I just want to reiterate what I've been kind of saying for the last 4 days, Brent, and you tell me if I'm wrong about this, but I think that you and I are going to be on the same page. If we just look at what has happened since we gapped lower on Friday, these candles are basically telling us that we've made no directional move outside of the high we made Friday and the low we made last Friday. And so we don't know, even still, 4 days holding the 20-day moving average. What we have here, as I see it, is indecision because we've been incapable of moving into the gap on a closing basis and incapable of falling through the lows we've created also into this gap on a closing basis. And ultimately, it's the move into the gap to the upside on a close or into the gap to the downside on a close that's going to likely dictate our next direction. Is that fair?
Yeah, I think that's fair. So we'll see. And again, we can, maybe there's an event like NVIDIA earnings that will help push it. However, we're kind of in this, the moment, you'd say the momentum, like we had upward momentum, you would say in early November, that post-election, big move up. Then the momentum switched, and now you'd say, well, the momentum is just kind of bled out of it, and it's just kind of in this neutral area. So it won't stay there forever. At some point, it'll go up or down. But so sometimes we find this in the market especially with whatever price pattern you're doing. There'll be an upper end, a resistance. There'll be a lower end, and then a lot of traders will say, look, if it breaks to the high side, it's more of a bullish indication. If it breaks to the downside, it's more of a bearish indication. We're going to withhold judgment on that until that happens. Although I will say one other way to look at it is, in general, if the prevailing trend has been bullish or up, investors often will look and tend to be more bullish on it but you can still wait in the shorter term, bullish on it, maybe more intermediate term, but in the shorter term, we're going to withhold judgment on that.
Yep. I think that's probably a good way to do it. And a reminder would be that while we talk about it on the daily chart here, Monday through Wednesday and on Fridays in the ETF class, the reality is these trends can be seen playing out in much, much longer windows of time than we tend to lean into on the daily chart. And so pare back, look at it on a weekly chart, and chances are you're going to find these trends to hold for much longer windows of time. We don't necessarily need to evaluate what's happening on a day-to-day basis, everybody. That's not necessary for all traders. That's just what we talk about here in terms of time frame associated with the market, but that doesn't mean it's right for you. Okay, let's look at the SOX. We fell out of that triangle this with Friday's move, and we've been in price discovery mode. As you can see, same thing played out here, Brent. Still have not gotten into the gap we created from Thursday into last Friday. So once more, do we have a short-term low? I don't know. Do we have an opportunity to be buyers in here? I don't know. And obviously, it's going to come down to what we hear from NVIDIA this afternoon.
We do have a break of the downward momentum. And so that, I mean, that's a start, I guess, in terms of if you were looking for the bounce there, but it's not the final touch that we're looking for. We certainly would want to see a break over the highs of the last 4 days.
Yep, that's what we'd ultimately like to see. There is some support here at this ledge. That I've drawn in. It's also, when we broke this downtrend line back here, Brent, it was really the beginning of the rally that pushed up. That was a wonderful push, by the way, everybody. If I drew that in, 24% nearly just from the break of that consolidation there that made it to the new high. So we went into this believing we could hold, and then we broke down. So if you've been holding investments within this space, the break we've made over the last 4 days is certainly a bit of a heads up from the technical condition. And it might be the kind of thing that would lead a bullish trader to start reducing position size just simply because you've broken the trend. It doesn't mean we can't get a bounce here by any means. That's entirely within reason of expectation. And yet, if you're uncomfortable with the amount of money deployed to the space right now, the move we've made in the last week could give traders reason to get a little bit defensive in nature, maybe building cash more so than staying long everything they've been long necessarily.
Yeah, I think it's a reminder when you see patterns like this and you get a little nervous or whatever, reevaluate stop losses that you have if you're a shorter term trader. What are those levels? Is it time to maybe adjust them to a more appropriate level, whether if they've been too low, I guess. And then just reevaluate that position. But right now, kind of same story. Yeah, we'll see what if the bounce really comes to fruition here or not.
Yeah, obviously the news is going to play a big part on that. So lots to learn there. All right, Brent. Another area that has been absolutely exploding has really been Bitcoin. And I thought we could just quickly look at the chart because there's been a lot of discussion about it potentially getting to a level of resistance at some point. We've been hearing that resistance was basically 93 to 94,000. Here we are at 94.5 today. And I think this is obviously a bullish chart given the break, but I think the big takeaway that I believe a lot of traders are noting is, there's a narrative discussion in here, Brent, but at the same time, we could just talk about it from a technical standpoint and kind of validate a little bit of what we've seen here.
Yeah, we have had a strong run. We had the break and a strong run on that, and at some point this will discontinue its run up. Mm-hmm. And when it does, when you see, and this isn't just because it's crypto traditionally is, when I say traditionally, we're only back several years, but traditionally is very volatile. But even individual stocks, when they've run up that quickly, they're just more volatile, and they tend to drop more quickly too on that too, when they do indeed drop. So we'll have to see on that, but right now, I don't see any weakness in her at this point.
Hard to find. And of course, as usual, traders who have been doing so long in this, or even the proxies, there's been some big moves in the companies that are kind of associated with with Bitcoin. We'll look at a couple of those charts real briefly and then hit some other stocks in the news for you all today. But of course, trade management is key as always, everybody. The two that we're looking at probably are Coinbase, which has seen a lot of price action quite similar to that of Bitcoin. You can see here that we took out similar level here, right? Depending on how you choose to draw that line. Maybe it's down here somewhere. If you want to capture the full peak that we got back here, we've exploded higher, but it's all been tied to the move you've seen in Bitcoin. So Coinbase has been making similar moves, kind of breaking out of a bull flag today with today's action. It's fading a little bit, has the look of maybe a shooting star at the top, but it's way too early to call it as such. And then the other one is MicroStrategy, MSTR. So there's been some proxies in the market, Brent, that have just been acting very similarly to the trends in Bitcoin.
They have, and these are by no means a recommendation. I'm just saying that sometimes people are reluctant to actually buy cryptocurrency itself or a futures product or something like that. They want a proxy where they can take advantage of that in the form of a stock itself.
Right.
And so sometimes they'll turn to Coinbase or MicroStrategy or others in there, and that is a way to do it. Now, invest at your own risk there on that. But obviously, if you get in a very volatile stock, you got to be prepared for the potential risk. As you can see, the potential reward that is possible there as well. Just huge potential moves. So when you're investing in certain things, parts of the market, I'm not just talking crypto or whatever here. When you're investing in more volatile parts, you need to assess what part of your portfolio is it. Like you may have a more conservative, longer term, perhaps, part of your portfolio, and that of stocks that don't move quite as quickly. You consider different asset allocations in your portfolio, different diversification of stocks, but you may have an allocation of a more aggressive part of your portfolio of big movers, as is in an attempt to get bigger returns, but you keep that often a smaller part of the portfolio because what can go up fast can also go down fast too.
That is the truth. One thing we have definitely learned, at least I have learned, I guess, in the quarter century I've been watching the market, is that moves like this, they go, and you don't know how long they might go, but you almost certainly know they're going to come back at some point, right?
Yeah, in fact, in the chat, James said it, hey, that chart reminds me of SMCI there.
Excellent point. Excellent point, right?
Well, and not to say that these are going to have the same fate as SMCI, but SMCI, for those of you who aren't aware, they had this kind of parabolic move up there, and then then it kind of fell from grace, and it started declining, and then to pile on, they had, there's questions about accounting practices and whatnot, which just kind of fed the narrative. But you get that parabolic move. There you go.
Yep. Look at that. I'm just highlighting this 1 month move, essentially 22 bars, a little bit 1 day or 2 day longer than a month. And it was up 245% just to that point before it got a pullback. And then it went up from the pullback low to the new highs, and it went up another 77%. So again, and of course, I think the reminder thereafter is without doubt that, hey, what goes up may very well need to unwind. And yes, there's been narrative associated with Supermicro, but it's an excellent case study of certain stocks making exceptional moves to the upside and not being able to hold. It's imperative that we traders recognize that these instances are just as likely as instances where the rally gets going great and then it just keeps on going, right, Brent? We can't assume that what goes up is going to continue to go higher. We've seen that play out in certain stocks, but we've also seen some of these just get beaten back. And the other one that comes to mind, you think about the healthcare stocks. Moderna, for example, during COVID went crazy, and Moderna's nowhere near COVID highs.
Yes, Moderna's gotten hit, and it doesn't mean you can't ever buy into a high flyer, so to speak. But what a common approach would be, hey, look, I know, first of all, know the potential movement up and down for it, and then trade accordingly and use stop levels as a typical approach on that. Now, the stop doesn't guarantee you're going to get out exactly where you put in your stop, but it is like, if you take a SMCI or whatever, if you use a stop when you're going up, and even if it's not the tightest stop in the world, it very likely would have gotten you out long before you took the biggest part of the losses there on that from the high to the low.
True. Hey, Brent, we've been talking a little bit about NVIDIA and their report coming today. I thought we'd take a quick look at how the chart appears and also look at the options on it to get a little clarity on potential expectations. If we do this, Brent, maybe you could walk us through it a little bit on the option side of things. The chart itself looks remaining bullish, obviously. We made a new all-time high just last week at that 149.77. Today's candle, not awesome at this point, but again, today afternoon is going to matter most. What do we need to pay attention to in terms of expectations, or what can we learn from the options market about the expectations for the earnings after the market?
Yeah, sure. That's a good question. Before I get to that, let me just mention this. You get a stock like NVIDIA that's been going up, and there's, it's hard not to have heard of NVIDIA over the past couple of years, but you tend to get very high, elevated expectations on the stock and the performance. So sometimes, even if it kind of comes in line, sometimes you get a sell-off on that. But you expect, you can look back in the past and you can kind of see past earnings and see, the stock has jumped a lot or dropped a lot. How big a move is that going to be? Well, option traders can kind of give you an idea of that, because the option market prices in a particular move. And so there's a couple different approaches. The kind of more traditional approach, if you will, is maybe to look at the money straddle price on the option, on the nearest term expiration option. That's basically the price of the call and the price of the put together. Now, you can also switch it to where it says straddle there if you go to spread and you do that straddle there, and you can see the price on that is about $12 and change there. So the general impression is the move is about a 1 standard deviation move. So roughly 68% of the time, the probability models, and that's all they are models. Who knows exactly what's going to happen? It could be way more or way less. But the probability models are just saying, hey, it's likely it's going to go either up, it's not up or down, just one or the other, about 12 and change. So you can add that to the current price, which is about 144.5 or so. And so that would put you about 157, I think, on the high side, or down to about 132 on the downside is kind of about where we're looking now. So that's the straddle price there. That's one way to kind of judge what the market's predicting for the move. The other way is you can kind of look on the right side of the page there, and there's a couple places. You can look at the market maker move at the top in yellow. That little orange yellowish symbol says MMM, market maker move. And that is essentially giving you that straddle price as well there. And so that's the quick way rather than doing the straddle. Maybe that's either way. And if you want to know just in the future kind of moves, if you want to look down the price potential moves into the future, could you collapse the monthly November? Yeah. If you look to the far right side of the page on those, you can see kind of the implied moves between now and whatever those expiration dates are, though. So there's a $25 move, but that's out until, is that that's December?
That's the last one in December.
Or that's January there. So,
you're right.
Obviously it gives you more time between now and then. There's more potential for a move between now and then. So you see that. But those are ways of kind of, it doesn't matter whether you're an options trader or not. You don't have to be an options trader. This is giving the stock trader some idea of what the market is pricing in for a potential move there.
Yeah, and that's ultimately what we're worried about, right? I mean, is trying to get a gauge. And obviously these are simply mathematical calculations, everybody. Yeah. It does not necessarily mean, I mean, we've seen, this is an 8.5% move. Priced in is how the option market is looking at it. And I've seen 8.5% expectations lead to a 2% move after market one day, up once and down once, and you never know if it's going to be in line. So these are just estimations. And if you start tracking things like this, against historical details, you can make note of this. And then the next time NVIDIA comes up, you could say, well, it was 8.5% in Q4. But in Q1, it was only 6%. Maybe that's something I can learn from. And then as you start tracking those details, maybe down the road, you've got some frame of reference, right? You can start thinking, hey, when this percentage of expected return is greater than what I deem to be important, X, then maybe that's when I'm a seller of options. I'm going to take advantage of opportunity in that way. The point being, as always, we can track a lot of this stuff, but you got to start documenting it as soon as possible. Make note of this stuff on your own and then start learning from it as we go forward. So I just found that to be a good way to look at things today, to give you some expectation of how we might look at this for the afternoon report. In terms of the chart, yeah, I mean, again, bullish chart. Have not been able to get through this ledge at just about 150. It seems like a pretty notable level. I don't like the candle today, I will admit, Brent. We're working our way more than halfway down yesterday's, so it's kind of a little bit of a negative in advance, but and as you can see, we're below the pivot here quickly as well. But again, news will trump everything we could talk about here as it relates to NVIDIA.
Absolutely. And by the way, if let's say you're around after the market closes today and you want to see what their earnings is doing, just make sure you switch to intraday chart like Kevin just did. Go to a 1 day 5 minute or 1 day 1 minute chart or something like that. And you can see on the chart it moving around. If you stay on this 1 year, 1 day chart, after hours, you're not going to see the after hour moves on that.
Yep. All right. How about we talk about, Brent, something from an already announced standpoint? We've seen that Target has not had a good day today, and it's probably pulling things down a little bit. I mean, we're seeing a healthy move lower, 20% down here post earnings, everybody. And I'm going to look for my detail, Brent, but speak to us a little bit about what we're seeing out of this chart. It's just downright ugly.
I don't know if I can add too much to that, Kevin, to be honest. That is ugly. That is a huge drop. They missed on their sales. They missed, their projection is lower. And so they've just struggled in comparison to Walmart. If you look at a Walmart chart, Walmart's just been they're as strong, I won't say as strong as everything in the market, but they're just about as strong as almost anything in the market here in terms of I posted top performers for the year on the S&P 100 on X yesterday, and Walmart wasn't at the very top of the list. In fact, NVIDIA was at the top of the list, but it was near the top of the list. Different story for Target going into today, and after today, even worse.
Yeah, not a great relationship. I mean, if you're talking about a pairs trade, Brent, this is one where traders who've been, anti-Target and pro-Walmart have done exceptionally well for themselves. The purple line above everybody, that's the Walmart line chart. And of course, we're seeing the price action in Target at this 122 ledge off pretty ugly. So this means if I'm not mistaken, let me make sure this is a year-to-date chart, because on a year-to-date basis, these percentages will help us out. So year-to-date, you've got Target off almost 15%, majority of which is happening today. And take a look at where we've got Walmart residing in the ballpark of up 60% in the year-to-date basis. Is that right, Brent?
That's
that's got to be right?
That's an incredible divergence there in terms of performance. And that, the reason why we're comparing these two is, at least in my mind, that I think that's the impediment to Target success right now. It seems like is their Walmart is winning the race, so to speak. And they doesn't mean that Target can't turn around and do better or whatever, but right now, Walmart is doing well in this economy, and part of it is this. I'm no expert on this, but obviously, inflation is a concern for probably the majority of the U.S. population, and Walmart is what comes to most people's mind first and foremost when they think of low-cost product, and Walmart has successfully owned that narrative, so to speak, and the stock price is showing that.
Yes, it is. Brent, we've got some other stocks in the news today that I thought we could just kind of take a highlight with real briefly. So just a couple of things here, everybody. I was noting there was an upgrade on Chewy. I don't know about all of you, but I do. I mean, this is not an endorsement by any means. I use Chewy for my mutts, who are one of which is a dog who requires quite a few pills, and they help me out there. So I get pills delivered to the house on a monthly basis. It's great. But I was noting today that they breaking out of a bull flag setup here. Yesterday's candle kind of insightful there, Brent. Bank of America analysts upgrading Chewy to buy. Previously had been at underperform, and they set a new target on this at $40, up from $24. So a nice bump there on Chewy.
Yeah, nice bump, nice bullish pattern, like flag pattern, breakout. Still got earnings here, it looks like, in not too far away, so that could change the narrative. But right now, looking bullish, intermediate term, nice little flag pattern breakout too.
Yep. Reporting on that is going to be before market open on December 4. So a heads up there, everybody. Had a downgrade on one that I'd been utilizing in my breakout trading class. And I don't know if you all saw this, but I had a breakout order execute here just a moment ago on another position. I can't wait to get to it this afternoon with you all. So if you're not aware of it, 1 p.m. Eastern, I'm doing trading breakouts. Check that out. We're pulling up JP Morgan, Brent, because I have a trade from that same class working in JPM. JP Morgan today, though, was downgraded by Oppenheimer to perform from outperform based on valuation. The firm notes that on Wednesday, November 6th, it was a day unlike any. Let me see here. Okay, I'm trying to read through these details, and they've given me way more than I was looking for, everybody. They're stating that Oppenheimer's commercial banking tracking app is now trading at a 74% relative to price to earnings versus what would be considered for equal weighted S&P, and a historical average of 73%. So they're stating that the group is now fairly valued, but not overvalued. Oppenheimer, however, is moving to the sidelines in JP Morgan as the stock now trades in line with fair model value. So their commentary is that the valuation has reached expectation and they are no longer looking for it to be a major position for them. So downgrade here to perform from outperform based on valuation. And you can see the stock is reacting negatively. We're off 1.6%, Brent, but when you look at the trend in here, it may have busted my bull flag in a negative sense, but at the same time, we've not taken out major support in the short run, have we?
No, we haven't. So, you can wait. Usually I'd consider that gap that we had on this as kind of the biggest next significant support level there for that. If it holds that, you're probably in decent shape on that. And this kind of just goes to show, whatever your technical analysis is, there's news, earnings obviously, but even, out of the blue, analyst rating can kind of change the narrative on that. So, but it looks like you have a stop in place on that, Kevin, and so you can let it work and see if if we can weather the storm of the analyst downgrade, and if not, if it breaks your support level, you exit.
Yep. The one thing I won't be doing is decreasing my stop order on that one in that class. So for those of you interested, come and visit and join me there at the 1 p.m. hour Eastern time, and we'll walk through how the portfolio, the example portfolio looks here in not just JP Morgan, but a couple other positions we've been watching for you. So, gang, we're going to have to cover that or call it a day here for Trader Talk right there. So thanks, Brent, as always. Love having you on a Wednesday. Covered quite a bit today. Thanks to James Boyd in the chat. Please take a moment and follow the three of us on X if you're not already doing so. And if you don't mind, hit that thumbs up button down below. It helps me out in the algorithm. We can get you back to get us moved up the ladder, so to speak, for viewers like yourselves who maybe are unfamiliar with the show. Maybe we can get this out there to the rest of them in the archive. So thanks, everybody. Have a fantastic Wednesday. We look forward to seeing you all again real soon.